Welcome everyone. Thank you for joining us this morning. I'm Nikki Jovicic from LookUpStrata, and we're delighted to present this New South Wales Q&A webinar session in conjunction with OCN. Karen Stiles from OCN will be joining us in just a little while to tell us more about OCN and why it's a good idea to become an Owners Corporation Network member. We're very happy to welcome Chen and Rod Laws from Tinworth Co, who are here for today's presentation to discuss what you need to know about auditing strata schemes, annual accounts and financial statements. Today we're talking about New South Wales Owners Corporations. While this presentation is from the viewpoint of owners corporations, committee members and lot owners, there is also lots of value for New South Wales strata managers. Please note any legislation mentioned during the session will be specifically referring to New South Wales legislation. Karen and Rod will have a presentation in a short while and then we'll move on to the Q&As. Before we begin, I'd like to mention that the information contained in this session, including the discussions that arise from submitted questions, is not legal advice and should not be relied upon as legal advice. You should seek independent advice before acting on the information contained in this session. Karen Stiles from OCN will be talking to us in a little while during the presentation. Owners Corporation Network exists to help strata owners navigate the complexities of strata living, from social and organisational challenges to financial and legal issues. Their people have first-hand experience of living in strata and the upsides and downsides of this fast-growing residential sector. They provide a range of services to members and also guidance and education for the wider community about achieving harmonious communal living. They can help provide advice and support on strategies for navigating and resolving many of the common issues that arise, whether you live in a strata apartment, villa or townhouse. They also take a proactive role in advocating for the interests of owners, including engaging with government and industry on critical topics such as consumer protection, strata body governance, and building defects. They're fiercely independent and not aligned with any commercial interests. What matters to you as a strata owner or resident is what matters most to OCN. LookUpStrata has been a supporter of OCN from the start. If you're familiar with our regular correspondence, you will have noticed that we regularly feature upcoming OCN events and have also published OCN articles to keep our audience informed. Karen will be telling us more about OCN during the presentation. And I'm delighted to introduce our panellists today, Rod Laws and Chen from Tinworth Co. Tinworth Co has specialist skills in the strata taxation and audit sector, with 30 years experience auditing from small to large strata schemes across Australia. Over this extensive period, they've worked closely with committee members and owners to fully understand their needs and pain points. Their strata specialist team provides personable and niche expertise in strata taxation and auditing services. They're quiet achievers who focus on creating transparent and accountable services to clients. Tinworth Co is a small boutique independent firm, and accordingly, they don't have the high overheads associated with larger firms. We've been working with Karen and Tinworth Co for quite a few years now. Karen has contributed to content on the LookUpStrata blog and is a member of the LookUpStrata directory. Also, by way of a disclaimer, apart from LookUpStrata, I'm a director of a body corporate management firm in southeast Queensland, and Tinworth Co is our accountant at Tower Body Corporate and has been so for many years. I welcome Karen and Rod.
Thank you, Nikki. Hello, everyone. An audit of an owners corporation is an assurance engagement. Our objectives are to obtain reasonable assurance that the financial report as a whole is free from material misstatement, whether due to fraud or error. And in doing so, to determine if the financial report presents a true and fair view of the financial performance and financial position of the Owners Corporation in accordance with the Strata Schemes Management Act and with the accounting policies of the Owners Corporation. There are a lot of concepts in this summary which I'll break down further. It's worth noting that an audit provides reasonable but not absolute assurance in respect of the financial report. Why is that? Even by looking at every transaction, it is still possible the financial report would not be absolutely correct. As a result of this, auditors must form the view that no one piece of evidence is of itself conclusive. So corroborating sources of evidence must be used to have confidence in the financial report. Auditors use a risk-based approach to ensure they are spending the largest amount of time where the risks are. A recent example being the Melissa Kadich case, the lady who allegedly ripped off a lot of super fund investors. She provided super fund auditors with ComSec reports showing the fund owned 100 BHP shares, for example. The report also showed the correct dividends had been paid. But ComSec reports always contain a HIN number that allows auditors to verify the holding balance and dividends with the share registry. In the Kadich case, there was no HIN number because the shares did not exist. The auditors relied on the ComSec report as being correct without corroborating them to the share registry. The audit report states the financial report is materially correct, not absolutely correct. This means the report is sufficiently correct that an owner would not change their behaviour towards the report. An example would be a $50 gardening expense that was coded to general repairs and not to gardening expenses. Not absolutely correct, but materially correct. Or an invoice was paid as $270 when it should have been $207. The idea of materiality is also an economic concept. If the auditor spent 2 hours or $720 to find the $63 error, will the owners be satisfied with the cost of finding the error? Similarly, if an auditor missed an error in the Commonwealth Bank's accounts for $10 million, that'd be pretty serious, right? It would represent an error of 0.11% of the bank's net assets. Still a lot of money, but not considered a material error in the financial report. The financial report complies with the Strata Schemes Management Act. The Act requires an income and expenditure report and a balance sheet, nothing else. The notes to the accounts outline the accounting policies used to prepare the financial report. These often include levy income is brought to account on an accruals basis, i.e. in respect of the period covered by the levy. But all other items of income and expense are brought to account on a cash basis, a received or spent basis. The notes to the accounts are very important and worth reading. For example, in the mid-2000s, the notes to the accounts of one of Australia's biggest telcos announced when a customer signed up to a new 1 or 2 year phone contract, they would now recognise all of that revenue on day one and not over the term of the contract, thus growing current year revenues and profits. Not exactly the honest approach. There are 3 main procedures that can be employed whilst performing an audit. Compliance testing. This involves the client having very effective and efficient internal controls in place, which the auditor can test to determine if they are effective and were in place for the entire financial year. If so, the auditor can rely on these controls and do less transactional testing. Substantive procedures involve testing transactions against source records to determine their validity. The third type of testing employed is analytical review. This uses past performance and other metrics to assess if the report is reasonable. An example would be looking at quarterly water rates. There should be 4 rates notices, not 2 and not 6. The Commonwealth Bank probably has 500 million transactions per day. If this financial report was audited using substantive testing, a team of hundreds of thousands of auditors would be working all year and at a cost of several $100 million. As the Commonwealth Bank has sophisticated internal controls in place, the auditors spend more time assessing the controls than testing transactions, although a large sample size would still be reviewed. An owner's corporation typically has a relatively small number of transactions, so it makes sense to test transactions to obtain the confidence in the financial report. And let's remember, large strata schemes, over $250,000 in levies, or over 100 lots, have to be audited in New South Wales, with owners in smaller schemes left with discretion to appoint an auditor. The audit process is more than checking cash payments against invoices. It also includes checking an auditor has been appointed at an AGM, reviewing all of the managing agent's management fees, and the increase in the management fee is in accordance with the agency agreement. All additional charges made by the agent are also validly reflected in the agency agreement. Checking the ABN of contractors against the ABR registry, also for GST registration. It is quite common to find small contractors charging GST when they are not registered for GST, or even having a fictitious ABN. My best suggestion to prevent fraud is for the owner's corporation to ratify all repair and replacement payments prior to them being paid by the agent. The committee are more likely to know if the lift was out of action earlier that month or if a tree was actually removed. This does not replace the audit process, but acts to strengthen the overall controls the Owners Corporation has in place and reduces the opportunity for fraud. What constitutes fraud? Some examples we've come across: a managing agent overcharging for additional services. One manager found with $55,000 in overcharge in one building, and they managed over 1,000 buildings. Bank statements scanned and manually changed to cover illegal payments. The chair and treasurer of an owners corporation using their own building repair company and building manager to invoice the owners corporation for work not performed. Putting a cleaning contract out for tender and selecting the most expensive quote with the expectation of kickbacks to be paid to the strata manager. Most of these fraud events are both preventable and detectable. I found the integrity of the strata manager is also a critical factor in accepting an assurance engagement for obvious reasons, and we will not accept strata or other engagements unless we have confidence in the manager's integrity. What is the difference between a trust account audit and a financial statement audit? The trust account audit is required by the New South Wales Property and Stock Agents Act, which requires every New South Wales strata manager holding money in trust accounts to arrange an annual audit of these trust accounts. This is what is known as a compliance audit and looks to verify if the agent has correctly accounted for the funds under management. This type of engagement involves reviewing the internal controls and the software used to ensure transactions cannot be deleted, for example, or that the trust accounts have not been overdrawn. Previously, auditors were given a reasonable amount of discretion when auditing a trust account as to what constituted a qualification or not. The Department of Fair Trading has now removed all audit discretion, and this results that any breach must be reported. And an agent with a breach can now expect a visit from the Department of Fair Trading. This is a zero tolerance approach. The audit of a financial report, on the other hand, is providing an opinion on the financial report of the Owners Corporation as a whole. I suppose the other issue is what doesn't constitute fraud, and some misconceptions, I suppose. Disagreements over decisions made by strata committees does not represent fraud. We are often called to audit multiple financial years of an owners corporation using forensic methods on the basis of mismanagement or fraud. When we finalise our examination, more often than not, there's a disagreement over what colour the fence was painted or other decisions made by the strata committee, rather than mismanagement or fraud. When we receive these invitations to do multiple year audits, we often suggest the owners corporation it's worth doing the first year and having a look and seeing if there is any mismanagement or fraud. Because doing 5 years as a blanket without any evidence of mismanagement or fraud doesn't add any value to the owners corporation and doesn't seem to be, economically a viable approach to take. Thank you.
Thank you, Rod. Now, I'm going to talking about where we all got confused. And please, before this, excuse my accents, and maybe there's another Asian things. When I get excited, I tend to speak very loud and fast. So today, I had to try my very, very best to control it. Okay, so from some occasion, I got I heard from the committee or the owner said to me, Karen, our strata manager said to us that we don't need to waste money to have the account audit because every year they have an internal audit. But what I was saying, it actually is a misleading note because what they referred to was what Rod previously said, that was compliance audit. And here, what we're talking about is a strata financial audit. It's an entire different the legislation and the entire different audit scope. Okay, so is it waste money? Absolutely not. Here you go. Might be no come out. And sometimes we got a phone call from the committee saying, Karen, that's money missing. something is wrong because our account is a deficit. And I said to them, hold on, guys, before you make that assumption, please just ask yourself the question first. Has your building raised enough levy to cover the whole year financial or the expenditure? If you don't, when your strata manager asks you guys and saying, we need to raise the levy, or sometimes you need to raise the special levy. If a majority of the owners corporation decide, no, we don't want to contribute more money, then you wonder why you have no money into your bank account. It's not a rocket science, isn't it? It's like our individual bank account. If we spend all, of course, we have no money left in the bank account. So the other thing is, when we submit the audit quote to the strata manager, and then they said to me, Karen, would you mind to give us a discount? Because we got another quote cheaper than yours. And you know what? Now my nose spinning. Now we built our reputation with our firm for 30 years experience. This is very crucial. And we have a zero tolerance bear to compromise the quality of a service, what we do. And we take our job very seriously. So we would rather do the proper and the thorough job than partially job. If you want to do the partially job, go somebody else. But at the end of the day, guys, you get what you pay for. You know what? If you willing, if the owners corporation already decided to want to have an auditor looking at the account, just make sure they do it properly and then spend the reasonable money for appoint the right auditor to work for you. And the other thing is, the auditor is work for the owners corporation, not the strata manager. Auditor is independent to basic on the strata, the owners corporation decision. So it's your right to select which auditor you want to appoint. And also it's your right to select if you want to audit 1 year, 3 years, or even 10 years. But mind you, in New South Wales, if you do decide to audit 10 years over the financial, you need to, because Strata Management Act 2015, the financial report only keep up to 7 years. So you need to question about if that 10 years of financial record is available there for the auditor doing the job. All right. And this is a common problem I have seen all the years. When the committee or the owners corporation decided they have some of the question they want to have an auditor to look at, fine. Then they're also in place to already decide to change it to the different strata manager, move on. That's also fine. But guys, I'm begging you, please don't change the manager and then have an auditor coming to look at the book from the previous manager's book and record, because we have seen like point fingers game all over. The new manager, when we audit, say, okay, this is a financial, that report is missing, that missing, and then the current new manager asked the previous manager about those records, and the previous manager say, I already hand over the USB or the book of the paper. I don't manage this building anymore. It's not my problem. And then let the owners corporation suffer if you have to go to the legal process and to get those documents, just not worth it. So get your process right, all right? And if you're an individual law owner, please, 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 you do not have an authority to appoint the auditor. Like Raw previously said, appoint auditor, you have to follow by the AGM and the AGM, because financial record is belong to the owners corporation. The auditor needs to have that authority to access those records in order to do the job. Even though if you offer to pay for, that doesn't matter. Okay, I know now I'm giving you a little bit all of about the negative side. Now I'm going to give you something advice so you can take away today. First of all, yes, point the strata auditor who have an understanding of the industry. Because if they don't understand strata industry, they have a really minimal of an experience to knowing understand the legislation, understand the scope, understand what sort of work they need to look into. If they're only able to perform partially their work instead of the complete work and the thorough work for you guys, you know what? Then truly you are wasting your time and money here. The other question, the other suggestion I would give that to you is, please, if some of the owner in your building happen to have a financial background or understand, can read the financial report like a balance sheet, get them involved and ask those questions. And then you guys can summarize those questions to present to the auditor before they start to conduct the job, okay? And the next part is most crucial part. Please have an internal control set up. What I meant by the internal control, appoint an auditor is a partially a detective control part, because the auditor will go through that process to detect what is wrong, if any question into your book and record, into your financial book and record, but also with a banking reconcile system, and appoint the strata manager you guys can trust. That's more in the detective control part. But haven't we all say prevention is better than cure? So please, preventive control is something you need to focus on. What I say by the preventive control is like have an approval process. For example, do not fully delegate your strata manager to process those invoices. Have that approval process into the committee or owners corporation with a certain amount. And the other thing is, make sure you have an authorized process to like select the contract and how to authorize the work approval to the contract. And it's not a rocket science. Again, human nature. If your strata manager, knowing someone in your building is checking, and of course, when they do the job, they will be more crucial and more thoroughly concerned about it. And I think they will be probably perform much better job. All right. And like you guys, I also live in the strata building. That's the reason why I joined to the OCN as a partially the individual member. And even though I work in the industry, sometimes I still find OCN member forum have a lot of the information and I can learn from it. And for other owners share the building problem, I think that is quite useful to use in my own building. That's the reason why today we also invite Karen from OCN to join us and talking about their organization. Okay, now I'm going to hand it to you now, Karen.
Thank you very much, Karen and Rod and Nikki. Good morning, everybody. We're delighted to join LookUpStrata and Tinworth Co at this event. Tinworth is, as Karen said, a long-term partner of OCN, and we're very grateful for their ongoing support. We're also delighted to be part of an important conversation around financials and financial audits. Our June 2021 survey of more than 230 strata owners found that financials and strata levies and capital works fund planning were in their top 6 topics of interest in the next 12 to 18 months. And that was a survey on sustainability and resilience. And only last week, there was a lively debate on our members forum about the benefits of audits. Back to OCN, for those of you who don't know about us, let me enlighten you. It all started back in 2002 when a group of strata owners got together and discovered they had similar issues: building defects, unfair contracts, expensive building insurance, and more. Now, almost 20 years on, OCN is the independent voice of residential strata owners. We're a not-for-profit member organisation with a mission to educate and advocate for residential strata owners and residents. Here are some of our achievements in 2020. We achieved a hard-fought ability for owners' corporations to prohibit investor owners from short-term letting and commissioned a members-only pro forma short-term letting bylaw to effect that. Our 2019 advocacy caused the New South Wales Government to legislate a retrospective statutory duty of care owed to New South Wales strata owners by building practitioners. That's incredibly important to people in buildings less than 10 years old. And we initiated the creation of a New South Wales strata portal, a first for Australia and only second in the world. This portal will allow government agencies to communicate directly with owners' corporations and collect data to identify and analyse strata trends to better support owners. This year, we've been very active with COVID and building building defects, as well as electric vehicle charging. And we've delivered a number of webinars on subjects as diverse as embedded networks, security, renovations, and grow your own wellbeing. So you can support OCN by becoming a member. Individual membership is just $66 for a year, and schemes are also invited to join. As well as supporting our ongoing advocacy and education work, as an OCN member, you'll enjoy all the valuable resources we have to share and gain exclusive discounts from our partners. Membership benefits include having a voice into government on all aspects of strata living, the members forum for seeking supplier recommendations and advice from informed members, access to educational resources and strata guides via the member portal, monthly newsletters, special offers from our partners and others, and discounted events and webinars. We also have a major face-to-face Strata Matters event on the 9th of December at the Kirribilli Club in Sydney, featuring the New South Wales Minister for Better Regulation and the New South Wales Building Commissioner, David Chandler, as well as the Consumer, Building and Property and Issues Resolution and Advisory Services Directors. All our details are on the website, which is www.ocn.org.au, and we're also active on Facebook, so please follow us. And that's it from me. I've really enjoyed this today. I've learned from Rod and Karen some really valuable tips in organising this. It's very easy to be on autopilot, even when you're on a committee. So I think this has been a really useful webinar, and look forward to the Q&A.
Excellent. Well, thank you so much. That brings back to me. If you wanted to, unshare screen. Thanks, Karen. That's great. Yeah, it was a very, very great webinar. Lots of information in there for everybody. And thank you, Karen, for the wrap up at the end for OCN, and also for all of the work that you do. We're always watching out for the work that you're doing for New South Wales lot owners, and it's really great to see. So yeah, congratulations on all of that. Okay, we're moving into the Q&A session. We had quite a few questions come in, and we've actually just had quite a few submitted during the chat as well. So we'll try and get to as many as we can. So I'll just jump into the first of the questions that we had submitted via email. Our treasurer provides direct assurance of every dollar into and out of the admin and capital works fund. What value can an annual audit of an OC's accounts provide over what a diligent and hands-on committee treasurer achieves?
Okay.
That's a fantastic situation where you've got such a attentive treasurer. The only thing I would suggest is that an external audit does provide a different set of eyes looking at the same books. And it also, we tend to find a lot of those situations that suddenly the treasurer sells or passes away, and suddenly there's no one else left to fill the void. As I said in my presentation, where the Owners Corporation is taking an incredibly active role in managing and in effect auditing what the agents are doing, to that degree, there's probably a very limited role that an external audit would do.
And also, because even though it's good, sometimes you have someone really able to help the Owners Corporation to looking through those payment and they check those payment, but depends on the size of your building, and then sometimes it's the structure of your building. For example, if your building is a residential under the BMC, it is more complex. There's a lot of things that even though the treasurer check every single dollars, but it's not just the dollars you're checking. You need to understand what the binding legislation and binding bylaw behind it. So that's why experienced auditor can provide that sort of the checking process to help the honest corporation detect what is, if that's correct, or if any mistake, or if any incorrect into the bank account system. Okay.
Thank you.
And Rod, don't you want to talk about that example we have for the central cost building?
No.
Okay, all right, fine.
Okay, we'll move on to the next question. Will an auditor make sensible recommendations about cost benefit of unwise expenditures? For example, many schemes spend more on annual taxation compliance than they earn in non-mutual income, instead of shifting funds into non-interest earning accounts and negating any obligations with the ATO.
I'll break the question up into two pieces. The first one is no, it's outside the scope of the audit engagement to make recommendations on unwise expenditure. I mean, just like the shareholders of BHP appoint the directors of BHP to run the company for them, the owners appoint the committee to run the affairs of the owners corporation on their behalf with the help of the agent. So if, again, getting back to my presentation, if they decide to paint the fence green instead of painting the fence black, that's their decision to make, and it's not really in the scope of the audit to question whether the fence should be green or black. To the second part of the question, I agree, especially with record low interest rates at the moment. It's often very little benefit of receiving $2 or $3 in interest in a interest-bearing account, and then having to pay a tax agent to prepare a return. But you need to also be mindful that interest is not the only item of assessable income for an owners corporation that triggers the requirement to lodge a tax return. Remember, an owners corporation is taxed as a company. And so as soon as that company earns $1 in assessable income, you have to prepare and lodge a tax return. But I do sympathise with the point. The other thing you need to be mindful of, and we see this a lot, is that everyone thinks I don't have any assessable income in my owners corporation, therefore I don't have to lodge a return. Tick, that's correct. However, where a return is not lodged at all, what happens is in 2, 3 or 4 years, and sometimes 19 years later, the commissioner writes to the current tax agent to say your 2002 income tax return remains outstanding. I am now ordering you to lodge a return, even if it is nil. And if you don't do that within the required time frame, the commissioner fines you $900 per year.
Per year.
So what we do as part of a service to make sure that it's complete is we lodge what's called a CU form or a client update form. So yes, if you need to lodge a return, we lodge a return. But if you don't need to lodge a return, we tell the commissioner in that year that you don't need to lodge a return, so that you won't get those letters in 3, 4 and 5 years saying, I'm now directing you to lodge a return.
Did you have anything to add to that, Karen, at all?
No, that's it.
Okay. Thank you. Can an auditor provide any proactive mitigation against risk of strata manager fraud? One of our schemes had all strata funds stolen by a strata management company in Queensland some years ago, despite having the accounts audited annually.
Again, that's yours, Rod.
Yeah, I think again, going back to the presentation, I think that the best suggestion in terms of strengthening the owners corporation's internal controls is making sure that the strata committee are the ones that are approving the expenditure before the payments are made. That's not going to mitigate against the risk of fraud. In my experience, fraud at a strata management level is more common where there is a single trust account with pooled funds. There's been quite a few of those in New South Wales in recent years. I would also add, I suppose, that the internal controls and the technology that banks use these days would hopefully prevent that from happening. If a strata manager decided I'm going to transfer $40,000 out of an owners corporation's account across to their account, that would probably ring bells at the bank, and hopefully that transaction would be frozen and questions asked the following morning.
Okay, and is anything happening with the legislation, do you know, to change the rule about having pooled trust accounts at all? Is that being discussed?
I wish. I think it's unfortunate because I know all of the frauds that I'm aware of. I'm sure there has been other frauds with individual trust accounts as well, but all of the major significant frauds I've been aware of have been where there's been a single pooled account and that account has been transferred.
Okay.
Either in whole or in part.
Okay. And Karen from OCN, do you know anything about that with changes in the future, or are you aware of anything?
I'm not, but I was just making notes to put that on my to-do list.
I do believe, I think that's something that's coming up, and I'd have to fact check this, but part of the Victorian legislation that's coming in later this year, I think they've actually looked at it down there and it is part of their new legislation. Okay, we'll move on to the next question. Where should the income refund show in the financial statements for the return of GST?
Okay, this is a bit of a misnomer. Now, every taxpayer in this country, whether you're an individual, a company, an owners corporation that's registered for GST, you are an unpaid employee of the Australian Taxation Office. So GST is a tax that you collect on levies. It's a tax that you pay on your expenses, your repairs, and whatever's left over, you hand over to the government. So the way that is accounted for is there is a liability account in the balance sheet called GST payable. And that can be negative sometimes if you're going to get a refund. So GST does not go through the income and expenditure statement at all. All of the numbers in the income and expenditure report are GST exclusive. So this GST liability account in the balance sheet is like a clearing account. So you collect GST, you pay GST out, whatever's left, you pay to the tax office, or if it's a refund, the tax office pays to you. And that GST clearing account at the end of each quarter should come to zero.
Thank you. All right, what is the best accounting package for strata managers to use that provides the greatest transparency for the owners corporation?
Oh my God, Nikki, we are talking about this question this morning. In fact, it's really hard to answer this because every single strata manager, they have a different software, and of course, there is some of the available software, but some company, they also develop their own software system. Regardless, whatever software they're using for the strata management agency, they all have a built-in with the accounting system to work for their helping them to manage their trust account and with all the individual strata plan side. But it's very hard for us to say which one is better than which, but I think it's more important. It's up to you as an owners corporation. It's up to you as an owner to get involved as your strata manager. See if they can provide like a regular information or provide you the access. You can get into the software to check lots of record. And I think rather than waiting for them, it's much better be more active from that part to check through. Isn't that, Rod?
Yeah, I certainly agree. I think, and the way technology is heading, a good majority of the strata software platforms are going online, so that at any point in time an owner can log in, they can see the financial position of the owners corporation. If the roof is being repaired and the agent has put quotes out, those quotes should be up on the website so that owners can log in and they can see those things. And that helps with the transparency of the management of the scheme.
Okay, we do have lots of questions coming in from our audience about accessing information and having access to information from their strata management. Okay, this one I think is quite complicated. We ran through it. We received it this morning and ran through it really quickly before the session, but I'll read through, and I think you're handling this one, Rod. Can you please clarify the trigger point for an audit? The definition of a budget containing contributions of over $250,000 is different if it also includes the opening balances of the scheme and not just contributions. When we calculate a budget, we're determining contributions and expenditure and understand we have opening balances, but would those amounts not have been catered for in the previous year when determining if an audit was required? We assume it is an accumulative trigger amount and not additional amount triggering the audit. Does the audit get triggered by a loan being drawn down into the Strata Plan's bank account?
Okay, let's break this down into various different points. The definition of a large scheme is, and that's the trigger for a mandated audit, is over 100 units, and where your levy income for a discrete year is more than $250,000. So I understand what you're saying about your budgets, which is in effect, it's a cash flow. So you end up with an opening balance, adding levies, less expenses, gives you a closing balance, but it's the actual levy income that will determine whether or not that triggers an audit. And sorry, the second part of the question at the very bottom was...
Did you want me to read that again?
Yeah, down the bottom, sorry.
It's, does the audit get triggered by a loan being drawn down into the Strata Plan's bank account?
No, it doesn't. No, it doesn't. So if you were to go out and borrow $1 million and then you drew down that $1 million into your bank account, that's not going through levy income, doesn't affect levy income, so that doesn't trigger that. And obviously, if you're less than 100 units, that doesn't trigger that either. So no, it doesn't.
Excellent. Okay, thank you so much. That's all of the questions that we had submitted via email, but we have had quite a few come in during the session. I haven't really read through these, so just bear with me. But this one was from Gregory. Are auditors required to report third-party related transactions? Example, the chairman of the body corporate is paid a fee and he uses friends and colleagues for repair work, etc.
Okay, in short, the answer is no. And there's a very technical and long-winded argument as to why, which I probably won't try and go into, but it comes down to accounting standards. You are either considered to be a reporting entity or a non-reporting entity. A reporting entity is BHP. So if you walk into BHP and say, how much do you spend on repairs? They'll throw you out the door and they'll say it's commercial in confidence. If you want to know how much your owner's corporation is spending on repairs, as an owner, you have a right to that information. Now, because you can demand that information, you are not a reporting entity, which means you don't have to comply with Australian accounting standards. Australian accounting standards do have a related party standard, which does require detailed disclosures of transactions with related parties. But because an owner's corporation is a non-reporting entity, those accounting standards do not apply. I think from a practical point of view, it would also be very difficult, if not impossible, for an auditor to know that the chairman is a builder, plumber, electrician, or his wife is, or their cousin is, or their brother is. That again would get down to the Strata Committee putting jobs out for tender and getting competitive prices to remove the possibility of nefarious, related party relationships.
Okay, thank you. We had one come in from John. Does the extent of audit testing and therefore audit costs vary with the quality of the strata manager that the OC uses, or is reliance placed on the fact that all strata managers are licensed?
Absolutely not. The fact that everyone is licensed does not have an influence on the audit at all. Yes, the record keeping and the accounting of the strata manager does have a strong bearing on the cost of the audit. We come across strata managers that initially have a very limited accounting knowledge. We do try and educate them. A classic is what we talked about before about GST. Yeah. There's a lot of concern. Why isn't GST going through the income and expenditure statement? And you have to educate them. This is why it doesn't. So we do try and educate our managers to make sure that they're not repeating the same mistakes. There's a lot of mispostings and miscodings and things like that, which we can help fix up. But yes, it does. It has a direct bearing. If we only last week we came upon an absolute train wreck of a set of accounts where trust levies have been issued, expenses have been paid, the bank has been reconciled, and those transactions have basically been almost deleted out of the system. And the bank system or the bank module in their software still thinks that transaction has been reconciled and is still there. It's not. So the bank account is never, ever going to reconcile. So you have to throw away the file and start again. So from an audit point of view, is that going to impact costs? Yes. Whereas if someone is very diligent with their accounting and they seek to learn and improve and get better, some of our managers, for example, where we do BAS returns, once upon a time there would be wild variances in their quarterly BAS reports, and there are now virtually none because they've been educated in what to do and what not to do.
You know, that's why quite often when the owners come to me and say, Karen, can you provide a quote? And the first question I always ask, who is your current strata manager? Because I would give me the idea straight away, what sort of the problem we are going to facing. If that is a certain type of the company, I know straight away. I know when, of course, because of that, I would get that perception and work out, you know, we might need to spend a bit more time to do this job. And rather on the other hand, if the company we've been worked through together before, and or if some of the company we know their book and the record is quite thorough, they have a very intensive, a very good internal accounting working into the house, working inside the strata company, and we know that would be, you know, the honest corporation straight away they get benefit from their audit cost, because we know we are not going to spend that much time for doing the work. That's reality. I'm sorry.
And it's great that you have that experience and knowledge after 30 years in the industry as well, Karen, to know.
Yes, absolutely.
Very good.
14.
Okay, we'll move on to the next question. Upon discovering anomalies within the financial statements provided at AGM and raising concerns to the strata agent, what are the next steps when the agent becomes defensive and committee members have a close relationship with the agent? Funds of $200,000 have disappeared from our balance sheet. Is this a police matter or a New South Wales fair trading matter?
It can be, but in that situation, if it is at all possible to hold an extraordinary AGM and get an auditor appointed to look into that, absolutely. If you are, and it gets back to my presentation before, and it's whilst not, by respectfully disagreeing with some people who say that there is mismanagement and fraud, and quite often that's not the case. There's a difference of opinion, but I'm not to say that this is not a disappearance at 200,000 is extremely serious. My experience is the police will not show any interest at all. Department of Fair Trading will, increasingly in the last, I think as a result possibly of the Royal Commission, where some of the federal regulators were shown to be less than diligent in the performance of their regulation duties. I think the Department of Fair Trading in the last 2 to 3 years has shown an increased willingness to certainly tackle rogue managers, and you can always lodge cases with the tribunal.
But I think the most practical way, and again, is still, if you are the owner, you have that question about and thinking there is a certain money, and or like in this case, 200 grand. That's a lot of money, but you might need to question about how you make that assumption for that amount of money. Is it by your own judgment, or is it by other professional judgment? And again, have an auditor as an independent auditor looking into it, make sure that judgment is being correct or incorrect, and find the answer first before you go anything further, because we all live in the strata scheme, and unfortunately, I know that it's a lot of the power struggle and the political game in between. But at the end of the day, if we have a problem, I always tell the owners, get united, work together, and then find out the problem, resolve it, find a solution. That is the best approach, my advice. And
certainly don't send emails around blaming
yes,
before
please.
or making comments before it's actually it's investigated and find out exactly what's happening.
Yes, 100 emails, 100 emails.
Okay, we had one come in. Does strata manager agent allow to transfer funds in their trust account to pay contractors' fees, service providers to owners corporation? No,
Sorry,
that's okay. We might skip the one. Sorry, I haven't pre-read these ones.
Yeah,
So
I'm not quite sure what the question is.
what about the committee being pressured to pay for work that was performed without strata committee authorization, without the necessary required number of quotes, without the work being verified as performed or completed to quality? I should mention the value of the unauthorized work was within the vicinity of $7,500.
Okay, I suppose that really gets down to a question of if the agent has delegated authority. If you've limited that delegation, or you've imposed a cost limit on what the agent can spend without going and getting prior approvals, but certainly without the strata committee approval, I would suggest perhaps that might be time to change agents.
And then again, it's like what I said before, you know, you guys, it's up to you guys to take it in control with a preventive control part. So, you know, don't leave everything to the strata manager. Get involved, ask them what they are doing. And you know, during the AGM, my experience during the AGM, my strata manager will ask him about, oh, this is what needs to be done, and put in a minute. And then, you know, the owners corporation, we will vote about, no, in fact, we think of $5,000. If over $5,000, we need to get the owners corporation majority approved. Otherwise, under $5,000, committee can get approval. Do you know what I mean? So these sort of things, it's you guys, again, it's up to the owners. You have to work together. Don't leave that to the manager.
Good advice. Thanks, Karen. And we had a statement that came through from Peter saying appointment of auditor should be a standard motion at the AGM each year. So would anybody like to speak about that?
Correct. Mandated.
Yes.
Okay.
Yep.
There's no other way.
That's it.
Excellent. Okay, thank you.
That's
Thanks,
the only way.
We are a little strata, 8 houses. Do we justify to order an audit of our financials?
Again, it goes back to what I was talking to before. If you are heavily involved in approving payments and you're completely on top of where the money is being spent and how it's being applied, and that is all been authorised, possibly not. But having said that, if you have any concerns or you aren't as involved perhaps as you should be, that might be something to consider.
You know, same things. I live in a 7 complex of a townhouse. And we have a couple of accountants live in a complex, and myself as well. So, and guess what? Every other year, I always tell them, suggest, you know, the owners corporation, every other year, even though we check very thoroughly, but it's just a piece of the mind, because our strata manager is not an accountant, or even some of them have previously have an accounting background experience, but still human errors still occur. You know what? It's just a best practice to have it done. And then if the auditor pick up something, for example, like we commonly, when we order the strata building, and we commonly pick up like a double payment or triple payment. What I mean by that is like one invoice has been paid twice or 3 times with the same suppliers. So when we pick up that sort of the error, we will tell the strata manager, and then they can go to check it, go to chasing with the supplier, get the money back to the owners corporation. As I always say to the strata manager, you know, even $1, that's still $1 back to the owners corporation account. You know what I mean? So not regularly need to be done, but you know, once in a while, just like buy insurance, a peace of mind to do it.
And not necessarily to check for fraud, but just to make sure everything's been done correctly, make honest mistakes.
That's a partially auditor's process when they conduct the audit, right? If they pick it up, of course, they were raising the question and they start ask the strata manager, and it depends on what the strata manager their response. So before we put into the floor, we always say to the strata manager, we always tell our auditor, before we have make our opinion, we always make sure we collect enough evidence in order for us to support that opinion, isn't it?
Sufficient and appropriate audit evidence is the official word.
Thank you.
There's a great question about community association and credit cards from Andrew Dale.
Okay,
Yes.
we're getting there. Did you want me to read that one out? We are a community association. From time to time, we have to order items, but the supplier will not ship until payment. This could take some time for the strata manager to effect the payment. We want to get a credit card and make such payments, but the strata manager says this can't be done because the funds are in a trust fund. I don't believe this, but can we get a credit card to make payments within the necessary receipts forwarded to the strata manager, backed up by a quotation through the meeting minutes? Oh, sorry, by authorization through the meeting minutes.
Yeah, the answer is that the agent is correct in that money that is held on behalf of the owners corporation is required to be held in a trust account, and a credit card is not a trust account. A trust account has to be held by an authorized deposit taking institution. So in that situation, I think, unfortunately, probably the only workaround would be if the owner was to pay, make the payment themselves, and then seek reimbursement from the strata manager as quickly as possible.
We've been raised this question before from one of the strata buildings, and yeah, we provide them exactly the same answer. It's not worth, you can't do that, but best way is just like what Ross said, to do a reimbursement. So you pay out from your pocket, and then the owners corporation reimbursement that amount back to your pocket. That's it.
Okay, and then Debbie's just made a comment. What about direct debits from trust accounts?
Direct debits are currently being removed from as many strata managers as possible.
Please.
Because direct debits are causing trust account breaches because, the hot water units burst, you suddenly write a check for $3,000 and suddenly a $5,000 electricity bill comes out the next day from direct debit. There's insufficient funds. The trust account goes into deficit. You have a breach, and that's potentially a $1,200 fine. So I think universally strata managers are removing direct debits, which is really unfortunate. Because obviously that just saves time and effort, but the cost of the breaches, if you end up with 8 breaches, that's a very expensive lunch.
Thank you. Debbie was just saying thanks. We don't allow them, and committees or embedded networks are insisting on them. So that gives Debbie some backup for their decision, which is good. Okay, I think that we're actually on time now for the hour. So we might just leave it there. We do have plenty of other questions that have been submitted. But if it's okay with you, Karen and Rod, we might send them through and we can get them back to those people and let people know of the responses, if that's all right. So yeah, definitely we'll do our best to sort of answer the questions that have come in. So if you did submit a question through chat and we ran out of time, I do think I've copied all of them down, but if you have any concerns, just please feel free to jump on the LookUpStrata site and go to our Ask a Strata question page, and you can submit the question that way. If you haven't popped a question in chat, but you have got a question, please let us know and we'll see what we can do to get a response back. So before we go, I'd like to say a really big thank you to all of our panellists today for spending the time with us. Extend a really big thank you to OCN for partnering with us in this event, and hopefully we can bring you more joint events in the future. At the end of the session, I always jump to our panellists and just ask them if they've got anything to say. I think Karen and Rod were fine because I think they've covered most of the things during their session, but Karen from OCN, I think you've got something that you'd like to mention to our audience.
Do I?
Oh, about the event that you've got coming up. I think you mentioned it quickly in the presentation, but did you just want to let people know, and a quick reminder that great event is coming up soon?
We've got a live event with the Minister for Better Regulation and the New South Wales Building Commissioner coming up on the 9th of December. We'd love to see everybody there. I think it'll be very informative and quite lively discussion, I imagine.
I'd imagine. Okay, that sounds great. And we might pop that in the bottom of our newsletters too, to let people know. We'll certainly be providing contact details for Karen and Rod from Tinworth, and also from Karen from OCN to let you know how you can get in touch with those two organisations moving forward. And yes, I thank you very much to everyone for joining us. Really great information that we've covered today. It was a really, really good session, and we hope to see you at one of our regular webinars in the future. So keep an an eye out for upcoming events, and we'll see you then. Thanks
Thank
very
you for having us.
Thanks, everybody. Goodbye.
Bye.